Hello everyone, Heinrich here with World Smart Mastery Channel. Today's episode we're going to be talking about stock investing versus gambling. I can tell you unequivocally that stock investing it's not gambling. Take for instance, you go to a poker store or you go to a casino and you put a bet for $5 or for $50. There isn't any point in time that you can pull back that money. But with stock investing, there are various times based on your risk tolerance that you can decide to pull back your money based on how that stock is performing. In addition, having a well-diversified portfolio that is made up of stocks, mutual funds, and index funds, you can easily leverage your risk and minimize the risk of you losing money. As opposed to gambling, whenever you place a bet, that's all you have. There are very few chances on your side. The dealer has more chances than you. So the quick question here is, will you prefer go gambling or put money into the stock market that there is a high probability that you will reap return in the future? I will introduce you to 3 different indexes that have performed extremely well over the period of time. The first index fund I'm going to introduce is the S&P 500. The S&P 500 is made up of top 500 companies that have been performing extremely well. This index fund was founded back in 1927 and it was going for $17 a share. Today, the S&P 500 shares are going for $3,049. However, after 1953 and going forward, the S&P has been growing in a very strategic and in an upward direction perspective. Pre-Great Depression, those who invested in the S&P 500, there was a high probability that they will make money 68% of the time, just for a year. If you invested that for 5 years, there is a high probability you will make money 78% of the time. And those that invested 10 and maybe 20 years, there was a high probability you'll make money 85 to 95% of the time. Therefore, what are you waiting to start investing in the stock market today? The next index fund is the Dow Jones Industrial Average. This IPO was introduced back in 1896 at the price of $100. Today, the Dow Jones Industrial is selling for a minimum share of $7,000. Back pre-Great Depression, if you invested in the Dow Jones just for 1 year, there is a high probability that you'll make your money back 68% times. If you invested that for 5 years, there's high probability you'll make profit 78%. And if you invested that between 10 and 20 years, there is a high probability you will make return 98% times. So there isn't any brainer in that. The index fund I'm going to introduce here is the NASDAQ. The NASDAQ was formed back in 1991. It was selling for, the IPO was introduced at $100 per share. The NASDAQ today, it's selling for $4,760. There isn't any better time to start investing in the stock market than today. Start chipping in stocks and brokerage accounts. You don't need $5,000, $10,000 to start investing today. You can start with as little as $5. You can buy a fraction of all the shares. You can invest mostly in those blue chip shares, blue chip stocks, those stocks that have a high market cap, they have been performing well over time, and there is little or there is very minimal risk with respect to them going bankrupt. Some of those companies you look out there like Facebook, Apple, Amazon, those companies have been performing extremely well. I'll talk about Cisco, for instance. Cisco, back between 1996 and 2000, Cisco grew over 3,000%. Between 1998 and 2020, Amazon grew 100,000%. To recap, I ask you to start thinking of investing today, because investment, it's not gambling. It's for the long run. And when you start investing, look at it as placing some passive income that you'll benefit in the long run. Choose in investing in blue chips stocks. Those are stocks that are, or companies that are well established with a high market cap, and they're there for a long run. Also, look with respect to some of those companies that are either index funds and also mutual funds. With these companies, they have managed their risk, and their risks are minimal as opposed to investing in penny stocks. Do your own research, don't follow the crowd, and good luck in the stock market. If you like this video, please don't forget to hit the subscribe and the like button. As always, I will see you in the next video. Ciao.